that just connect with us today, you can check the channel, that is the Forex channel, to see what we did yesterday. I mean, the course yesterday is already on the channel, so you can go right here and check the video out yourself. This video right here, just post this video less than or about an hour ago. And another thing is, if you have not yet subscribed to the channel, please do that for us. Subscribe to the channel and turn on this bell icon, the notification bell, so that you get notified anytime we post updates. Alright, so today at the end of the training, I will be giving much time for question and answer, because today will be the last day of training for this very course, which is very important. So stay till the end. Don't ask why the training is ongoing, just learn, and where you don't understand, you write it down. At the end of the training, I will tell you to ask. Before I proceed, after today's training, we'll be guiding some persons that are very interested in our course through the process of becoming a successful trader. And like I said, all our courses will be on discount offer after today's training, so you can join us and join the trading group. You have to graduate from the general group where you are right now to the trading group, which you're going to see the packages, and I have discounted everything for you guys so that almost everybody can participate. Another question is where to get funding for your trading. That is not a problem right now nowadays when it comes to trading, because there are what we call prop firm that gives account to traders to trade, and we will be guiding you also on how to get a prop firm account when you join us and become part of the academy by taking any of our courses, which will be pasted in the WhatsApp group. After you've joined and learn how to do technical analysis, because you must learn how to do technical analysis very well, then you can now go for a prop firm account so that you can start trading with real money and generate profit for yourself. Such account can be a $2,000 account, $5,000, $50,000, $100,000, okay, even up to $200,000 to $500,000, okay. So all you need to do first of all is learn how to do your analysis, learn this chart, learn everything you need to know about forex and market prediction, both technical and fundamentals, and then we will guide you on how to get a prop firm account. Mr. David is also here to also actually break down for us in the course. That is when you join the academy and become part of us. That is at the end of this very training today. Alright, so without wasting much time any longer, let's go straight to what we have tonight. And then tonight I am going to be explaining a lot of stuff. We'll do some mathematics in forex. Most of this mathematics is not needed anymore, but as a trader you need to understand what you are doing. Like I said yesterday, don't just trade without knowing what you are doing. You must know what you are doing and then do it perfectly. So you are welcome to the home of successful traders. My name is Paradise and I will walk you through today's training. So today will be Introduction to Forex Trading Basics 2. We traded one yesterday and today we are on the second phase of this trading journey. And today we'll be starting with PIP. What's PIP mean? PIP simply means price interest points. I can bet you this, that most people trading forex don't know what PIP stands for. So for you, PIP means price interest points. So a pip is the smallest unit of change that occur in the currency movement. So when currencies are moving, there are slight changes that occur when they are moving up and down, and those fractions, those cents, those euros that occur as currency move is called a pip. Let's say, for example, if you come here and this market move all the way from this area, move all the way from here upward to this very point. If you are asked how many pips that the market move from here to this point, the only thing you can do to know that is to do your pip calculation, and that is what I'm going to teach you right now. The forex market is all about catching pips. Okay, you hear of traders, how many pips do you trade today? Or I'm in loss of about maybe 15 pips, 20 pips, or I'm in profit of about 60 pips. These are very important because the market is all about pips. So let's say, for example, Euro USD is equal to 1.4488, and in this example, a single pip equals the slight change that occur on the fourth decimal place. That is, the slight change that occur on this very 8 is a pip movement. So because we are looking at the slight change that occur in this pip movement, then we can see it is 0.001, because 0.001 is what will occur on this very value, either upward or downward. So if it's upward, a slight change here will make there to be 9. A slight change here downward will make this 8 to be 7. That's a slight change. That's what pip is all about. So the way you calculate it, you do 0.0001. This one means the slight change that occurs. So all pairs that are quoted with US dollar and other currency have a pip value of 0.001. Don't forget this, very important. This is very important. We'll be using this for a lot of calculation. Like I said, for all US dollar pairs with other currency, the only notable exception of this rule, this very rule here, is the XXXGPY. What this means is every other pair slash JPY. That means you can also have USD JPY, or you have Euro JPY. Any currency that is paired with JPY is an exception of this rule of 0.001. This is very important, don't forget. So this is what we will use to calculate our pip for non-JPY pairs and every other pairs. Why we'll be using 0.01 for calculation of pip for JPY pairs only. I repeat again, we'll be using this for our pip calculation for non-JPY pairs, that is either Euro USD, Euro NZD, GBP Euro, any pairs at all that is not JPY. Why we'll be using this 0.01 for our JPY calculation for JPY pairs. Let's say, for example, in this case, if I go over to this area, so on TradingView we have usdjpy. If you want to know the pip calculation, you have to take 0.01 for your calculation. But if I put on Euro USD, the calculation for Euro USD have to be 0.0001 for Euro USD. Okay, this Euro USD. So we'll be doing a lot of pip calculation today so that you better understand what all this is all about. Alright, so that is pip. Let's say, for example, let's calculate a pip for Euro USD. Let's say, for example, market move, follow me gradually, market move all the way from here to this point, upward. And they ask you from here to this point is how many pips. Remember, the pip is significant on the fourth number after the decimal point. From here, the fourth number after the decimal point. So if I move my cursor down here, and then you put from here, let's use this value, 1 point, do it on your calculator, 1.0. So we have 1.0922. Okay, if you look at it there, you see it's 1.09229, but you remove the 9. That means you have to neglect the fifth value. That fifth value there is for spread calculation. For ease of your pip calculation, this is the first way you can do it. I will tell you the second way to do it. The first way you do it is you take this value, 1.09229, minus it 229. That's take everything, the 5 numbers after the decimal place, and then you minus it from what you have here. What you have here, because we are looking at from here to this point, how many pips did the market move to this point. Let's take this value of minus or subtract it from 1.0337. So you will have a negative value. That negative value is that negative number in front of that answer. Make it neglect the negative value there, because normally you would have done 1.10337 minus from the one downward, okay, to get the positive value. So the pip here should be 110 pips. Your value should be 0.01108. Like I said, that 8 is for spread, so you remove it, neglect it. Your pip is now 0.0110. And then to make it a whole number, you just say your pip is 110. So from here to this point, the market moved 110 pips. That is how you calculate your pip in the market. Let me do another one again on the screen with a calculator. Okay, so let me bring out this calculator here. I believe everyone can see here. So let's calculate for usdjpy still, and then we'll do another one for for Euro USD first, sorry, then we'll do another one for JPY pairs, so you know how to do that as well. Okay, so let's calculate pip from this point up to this area. Okay, let's use this area now. So calculate from here to this point. What's the pip? Is very simple. Just bring out your calculator, and then let's take this number 1.10480. 1.10480. So I will type 1.10480 minus it from this number here, because we are calculating from here to this point to know the number of pips that the market moved from here to this area. So from here to this point, let's use this value, 1.08977. 1.08977. So minus 1.08977. So this is what you will have as your answer. But I said the pip start from the fourth number, which is this one, the 0 here. That's where the pip start from. So you neglect this 3. The fifth value is not included. So your pip is not 0.0150. That's not the pip. The pip here is 150. That's how you calculate it. So the market moved from here to this point 150 pips. That is how you calculate pip. Remember, the fourth one is where the pip start from for any other pairs that is not JPY pair. So let's quickly do for a JPY pair. Let's say in this case euro JPY. Let's do for euro JPY. Like I said earlier, for JPY pairs is 2 digits. That's 2 number after the decimal point. 2 number after the decimal point, very important. So from here, let's say the market moved from this point, from this area to this point. So that is how many pips. So we're looking at from here, market moved from here up to this point. That is how many pips. Let's do it together again. So I'll bring up the calculator. Let's say we take this value first at this point, which is, let's take this value together, 158.965. 158.965. 158.965. So I'll do 158.965 minus this value from what is here. So we'll take this one, 156.513. 156.513. So we'll do minus 156.513. So this is what you will have as your value. Like I said, pip calculation for JPY pay sometimes can be a little bit confusing, but it's very simple. All you need to do is to remove these 2. The third value here is the spread, so it's not involved in the pip calculation. And then the rest number that remain, just take it as a whole number. So if you remove 2 and then remove this dot here, the rest number that remains is a whole number. Another way to do it is to flip this dot back 2 times. So 1, 2. Then you'll be left with 245 pips. 245 pips. So from here to this area, the market moved 245 pips. So this is how you do your pip calculation for non-JPY pairs and JPY pairs. Very, very simple. Today we'll look at a lot of calculation in Forex and how to do it so that you get yourself acquainted to it. Now, the thing is it compulsory for you to calculate all these things when you are trading? No, the market already do that for you, but these are things you need to know. The market already do all these things for you. These are things you need to know. You can just go to your trading platform on MT5 or MT4 and draw it out, and you see the number of pips, which we are going to go to details in the crash course. So pip value. The value of a pip, which could be linked directly to your profit or loss, may need to be converted back to whatever currency your account is denominated in. Now, don't worry about this grammar. Pip value, what this pip value means is that if we say that the market move by 0.001 and 0.0001 for non-JPY pairs, how much dollars for each of these pip? So what this means, pip value mean 1 pip is equal to how many dollars for euro JPY. The same thing, 1 pip is equal to how many dollars for euro USD. So that if you are in a trade, let's say for example, and you enter the trade here, and market begin to go down. In fact, before the market get to this point, you should know what your profit will be, because you already know if 1 pip is equal to how many dollars, then from here to this point is how many pips times that number of dollars that 1 pip is giving you. That is what pip value is all about. So it helps you calculate 1 single pip for a currency pair in dollars. So let's say for example in this case, so if you have US dollar account and you are trading with a standard lot, don't bother about what a standard lot means, but just follow the calculation. And then you're using euro USD JPY. So each pip is now dominated in yen, because in yen is the quote currency. Remember what this slide said, say the quote currency in any crosses. So yen is a quote currency. So before converting it into USD, this is the calculation you need to do. So yen standard pip value is 0.01 that I talked about before. Yen standard pip value, this is standard pip value for yen. All the yen pairs, that's JPY pairs, the standard pip value is this. Why non-JPY pairs, the standard pip value is 0.0001 that I talked about before. So let's say for example the current market price of USDJPY is this, that's 82.00 or 82 yen for example. Then you have 1 standard lot, which is a 100,000 unit of the base currency. Don't bother what lot is for now. We are going to explain what lot is, and you better understand what this explanation means later on in the course. Today. So you can simply put your pip value or value per pip is equal to 0.01, which is this, times 100,000 unit of the base currency for 1 lot, divide by 82, which is the current market price for yen. Then this will give you $12.195 per pip. That means each of these pip movements for USD JPY is going to give you $12.195. We can as well apply the same thing here on this very chart in euro JPY. So for euro JPY, you will do 0.01 multiply by 100,000 units of the base currency. Let's say for example you're using a standard lot of the base currency. Everything divided by the current market price of yen. The current market price now is this, which is 158.051. Then the value is the value per pip. So if we do that, I want to make the course as self-explanatory as possible. So this times 100,000, so it will give you this, divide by 158.051. Who have the same value, 6.327, or you can say $6. That is the value of each pip movement for euro JPY as at when the market closed yesterday. So what that means is from this point to this point we calculated was about 240 pips or so. If you're using a standard lot, that standard lot times the number of pips, which is 240, multiplied by the pip value, which is 6, will give you the amount in dollars that you will make from here to this point. So if we do that, So if we do that, that will give you 1 times 240 times 6. This is the amount you make in dollars. $1,440. That is from here to this point with one standard lot. I haven't explained this. So this is for USDJPY pair. Each pair have its own pip movement. Let's look at non-JPY pairs. Let's say, for example, Euro USD, which is the most common pair in the market and the most traded pair. The USD standard pip value is this 0.0001, and let's say, for example, the current market price for Euro USD is 1.15793, and we're using a standard lot which is 100,000 units of the base currency. The pip value would then be 0.0001 times 100,000 units divided by the current market price, which is this value, and it will give you this. Now, because this is in euro, you have to convert this into US dollars. Listen attentively, because almost, let me say, all traders, forex traders, know that for Euro USD, a standard lot is equal to $10, but they don't know the calculation behind it. This is the calculation of how it comes to be $10 for a single pip for Euro USD pair. So from here, since the base currency is in euro, we have to convert it to US dollar by multiplying our answer by the market price. So if you multiply the answer 8.663 euros times 1.15793, which is the current market price, it will give you $10 per pip for Euro USD. Let's use the current market price yesterday when market closed to do a new calculation and see whether we'll arrive at the same value for Euro USD. So if I bring up Euro USD, so Euro USD is on the chart, and the current market price is at this very point. This is the current market price where market closed yesterday. So if you want to do this calculation, it's very simple. What you have to do is, since it's a non-JPY pair, Euro USD is a non-JPY pair, so you have to do 0.0001 multiplied by 100,000. Okay, 100,000. So you multiply by 100,000 for a standard lot. You come to know what a standard lot is later. So which will give you this, divide by the current market price, which is this, divide by 1.707,946. Okay, if you get it correctly, then this is the answer in euro. You have to multiply this answer by this. Okay, so you do multiply by the current market price, which is this, which is 1.07946, $10. So $10. So that is how we arrive at $10 per pip for a Euro USD. For Euro USD pair is a standard, but most forex traders don't know how this standard came to be. So this is the calculation. Know this now. So let's say if we say the market moved from here up to this point for Euro USD, and we say, let's say for example, from this point to this point is a 50 pip movement. All you need to do is to multiply the number of pips, let's say 50, times the value per pip, which is 10, times your lot size, will give you the profit you will make or the loss you will make on this trade. We will come to profit and loss later in today's training, so sit tight. So having understand value per pip, like I always say, the video is recording, the class is recorded, and then you can always get access to it on the channel. It will be on the channel. Don't forget to subscribe and turn on the bell notification so you can watch it over and over again, and then also keep your question at the end of the trading. Contract size or lot size or volume, all of these mean the same thing. Either you call it contract size, lot size, or volume. Most broker uses volume. For example, yesterday when I was placing trade, you will see their volume is the same thing. So contract size is basically the bundling up of small pieces of a specific currency into larger sizes. So in general, currencies must be traded in lots, because if you trade it the way they are, you cannot actually get massive gain from it. Okay, so this lot size help to bundle it. So most brokers offers variety of lot sizes ranging from a standard lot, which is 100,000 units of the base currency that I was talking about when I was talking about pip value, a mini lot, which is 10,000 units of the base currency, and we have micro lot, 1,000 units of the base currency, and we have nano lot, 100 units of the base currency. Most brokers don't offer nano lots. It's very rare for you to see a broker that will offer you a nano lot. What you will see on most brokers platform is standard lots, mini lots, and micro lots. So what this means is this: for a one standard lot will give you 100,000 of the base currency. Two standard lots is equal to 200,000 of the base currency. Like that. Three standard lots mean 300,000 of the base currency. That's what it means. For a mini lot, which is a 10,000 of the base currency, so if you have one mini lot, will give you this 10,000 units of the base currency. So 2 will give you 20,000 of the base currency, while 3 mini lots will give you 30,000 of the base currency. Now when you go to your broker's website, what instead of you to see 1 mini lot, 2 mini lot, 3 mini lot, what you will see is 0.1, because they divide this 10,000 by 100,000, okay, which is a standard. If you divide 10,000 by 100,000, you have 0.1. If you divide 20,000 by 100,000, you will have 0.2, which is a mini lot. So this is 2 mini lots. We have 0.3. For a 3 mini lot, we have 0.4. For a 4 mini lot, we have 0.5. For a 5 mini lot. Okay, so understand this and understand it clearly. How we come to have 0.1, 0.2, 0.3, 0.4 is just by dividing, if it is 1 mini lot, 10,000 units of the base currency by 100,000. These are very simple calculation in Forex that you need to know as a trader. Don't just trade. Know the reason why things are the way they are. And then, having understand what lot is, the next thing you need to understand is margin. So after lot, margin is the amount of money needed to open or maintain a position. Margin is the amount of money needed to open or maintain a position. So think of it as a collateral given to you by a financial institution when you want to borrow money. Okay, so you put it there as a goodwill deposit. So think of it as a good faith deposit that you are doing. What does that mean? It's very simple. When you want to place a trade in the forex market, you don't just take trade, you take trade with money. So if you are using $10 to enter that trade, that $10 is your margin. If you are using $20 to enter that trade, that $20 is your margin. Does it mean you will lose that $20? Immediately, the answer is no, except market move against you to your stop loss. So if you enter a trade with $100, immediately you enter, you will not lose the $100, except market go against you to certain point where your stop loss is. That is when you will lose this $100, which is your margin, goodwill deposit. You must have to have margin for you to place a position or take a trade. Margin call. So this occurs when the broker notify you that the account holder does not have any goodwill deposit anymore, or your goodwill deposit are falling below the required amount. So in this case, the trade is against the trader. Okay, so let's say for example you enter here for a short, and yesterday we say short means sell, and then you are saying market should go down, but market did not go down, and then your stop loss is around this area. You say market should go down, market did not go down, market start moving upward. At some point near your stop loss, the broker will notify you that you are already falling short of balance and that you should add more money. The reason is because if you don't add more money, that money that you put as goodwill deposit will do what? Will be lost by you, and you will automatically close out of the position, and the money will just wipe out of your account. That's how it works. So let's say you put on $10 here as margin, and then the market did not go in your favor, market now go up, you will lose this $10 if you don't add enough margin. And more reason why we place stop loss in the market, so that you target the point of how much you want to lose, because you can control your losses in forex. Let's say for example market is at this very point, and you say market is going to go down, and market begin to go down from here, market go down, and your profit is target is here. Once market move to your profit target, it will collect profit for you automatically if you set a take profit. The same thing if you have 100,000, or let's say for example $100 in your account. From this $100 you can say, okay, I want to place a trade, and that trade I want to place, I want to lose only $10. From this $100 I want to lose only $10 if markets go against my position. So instead of you to lose the whole $100 and market move against you and hit your stop loss, you will lose only $10 out of this $100. So if you lose $10 out of $100, you are left with $90 to still look for another position to take. So when you do accurate and proper technical analysis, you should be in the right direction of the market 80 to 90% of the time, even 95% of the time, for you to be in profit. And then to further strengthen your reward, there is what we call risk reward management. That is money management and risk management, and all of this will come later in the crash course. So as you join us from next week, because it's going to be a full course that will run for about 2 to 3 months. It's an intensive training, so ensure you join us, don't miss it. It's for just a little dollars, and then market move in your favor, it will automatically collect the profit for you, and the profit will be added to your $100 that you have in your account. That's how the market works. So in forex, be ready to lose, be ready to win. What we are here to do is to guide you to success. Since we are successful, is to show you how to do it properly. And for those of you that will be joining the course, you'll be added to the signal group where you'll be receiving signals from me and other professional traders in the academy. So, having talked about margin call, leverage, think of leverage as a borrowed money given to you by your broker to occupy a position that you wouldn't have been able to occupy with your normal equity. So with your normal account balance, you should not be able to occupy this position, but I am giving you this privilege to do this thing. So that is what leverage does. It helps amplify your position. So remember that leverage works against you and as well for you. So it is a two-edged sword, and it can work against you and as well for you. So brokers offer different leverages. For example, we have 1 to 5 leverage, 1 to 25, 1 to 50, up to 1 to 1000 leverage. That is a maximum brokers offer. 1 to 1000. 1 to 1000. That's the max you will see a broker offer. And I want to explain something very important that you will hardly see it in any place that they are teaching Forex. There is a connection between leverage, margin, and lot size. So let's assume, for example, let's see how leverage works. Assuming you choose a leverage of 1 to 100 and your initial deposit that you deposit in your account, or your initial margin, is $1,000. Because of the leverage of 1 to 100, you can choose or you can occupy a position worth $100,000. How does it work? Simply multiply the 100 here times the $1,000 in your account. You can occupy this much. What this means is that you can place a trade with a one standard lot. Remember, we said one standard lot is 100,000 units of the base currency, which is a standard lot. The same thing too, if you have a leverage of, let's say, 1 to 1000, for example, and you have $1,000 in your account, and you have a leverage of 1 to 1000, you multiply this times this. Okay, so what you will have there is what? If you multiply 1000 times 1000, that's 1000 here by this $1,000, what will you have? Okay, let me do the calculation for us. So you just simply do 1000 times 1000. This is 1 million. What that means is that on that account, you can take a position that is up to 11 standard lots. 11 standard lots, you can take this position. Normally, to take 11 standard lots on a position is not an easy stop. That should be a very big account. But with this your small account of $1,000, you can occupy that position. The same thing happens if this is 1 to 50. You just multiply the 50 by 1000. Okay, let's say for example you don't have $1,000 and you have $100 and your leverage is 1 to 100, or let's say 1 to 1000. Okay, you choose a very high leverage of 1 to 1000, but what you have in your account is $100. Very simple. You do $100 times your 1000, which is your leverage. So what you have there is, you simply do 100, which is the $100 times the 1000 leverage. You can occupy a position worth $1,000 100,000 of the base currency, which is a standard lot. So this can help you occupy a one standard lot position. So this is how leverage works. If you notice, what happened here is that if we say 100,000 units of a base currency is equal to a standard lot, then that also means that 10,000 units is equal to 0.1 standard lot, which is a mini lot. What this implies is that you must not, for this $100 account with a 1 to 1,000 leverage, the maximum you can take is a 1 standard lot, but you can still go down below 1 standard lot and take 0.1 lot, or even a micro lot of 0.01. But the maximum you can take is a standard lot. This is what it means. This connection between leverage, lot size, and margin is a very important calculation in Forex, so that you know what you are doing. Like I said earlier, don't just do things. No reason why you are doing what you are doing, especially in the Forex market, so that you'll be on the right side of the market 95% of the time, especially when it comes to technical analysis. Alright, have we talked about leverage, how to make profit, or how profit is made in the Forex market? How do you make profit in the Forex market? It's very simple. Let's say, for example, you believe that euro value to the US dollar is going to increase and decide to buy 1 mini lot, which is 10,000 units of euro at the rate of 1.5100. Now, to do this, you need to buy 10,000 euros with this amount of dollars, because that was the price. Remember, if you have 1 euro equal to 1.500, 1 euro here is 1 monetary unit that I talked about in yesterday's course, times what you have here. Okay, and in this case you're using a mini lot. So a mini lot is a 10,000 of the base currency. So this times 1 will give you 10,000, times this value will give you the amount in dollars. Let's say after 2 weeks you buy, that means you use 10,000 euros to buy this quantity of US dollars, this quantity of dollars. Then after 2 weeks you come back, the euro have increased in value. Let's say, for example, the euro increased in value from this price here to this price of dollars. The difference between where you buy the dollars and where you are selling the dollars is your profit. It's as simple as that. So this is how we make profits in the Forex market. So the difference on the transaction is where you sold, which is 16,200, and where you bought, which is 1,500, which will give you $1,100 profits. So you've made $1,100 profit on that transaction. So the interesting thing is about the market, you use lots to bundle your profits. The same thing, it also bundles your loss, but you can as well minimize your loss to the barest minimum. The next thing here is profits and loss calculation in Forex. How to calculate profits and loss is a very simple thing to do. Now that you know lot size, you know how to calculate the number of pips, and you know your pip value for currency. It's very simple. So you do your lot size times the number of pips times the pip value. So lot size multiplied by number of pips multiplied by pip value will give you your profit or your loss. Let's say in this case, if your pip value, number of pips from here to this point, let's say for example, is 150 pips. For you to calculate your profit from here to this point, you simply do, let's assume the pip movement from here to this point is 150. Assuming, but you can do the calculation. So you do 150 times your lot size. Let's say you're using a 0.1 lot, which is a mini lot, times the value per pip. And I said the value per pip for EURUSD is $10, which we did the calculation. It will give you $150 for a mini lot from this point to this point profit. The same thing if you use a standard lot, one standard lot times 150 pips times the pip value is give you $1,500. So if you use a standard lot, a market move from here to this point, you're getting $1,500. This movement can occur in less than no time. For example, from here to this point, this is a 4-hour chart. So if each of these candles are for 4 hours and they start from here to this point, that let's say in a day this market move, and you can make that much in the forex market depending on what you are trading with, the size of your account. The truth about this market is that you can make as much as you can with your technical know-how in the market. All you need to do is to know how to predict very well, having understand the basics of forex and other things that you need to do. Then that means you can trade the market effectively. Forex trading style. Forex trading style. There are different trading styles in the market. The first one is scalping. Scalping means that you don't want to stay too long in the market, and their favorite chart is 1 minute and 5 minutes. So you enter in and out of the market as a scalper. You scalp, you enter in and out of the market. Their favorite chart, like I said, is 1 minute and 5 minutes. Day trading is when you trade for the day. You don't extend your trade to the next day. That means you make trade and close the trade. You don't allow the trade to enter the next day. That's day trading. For scalping, your trade lasts for seconds and minutes. But for day trading, your trade can last for hours. And then the popular chart that a day trader will look at is 15 minutes, 30 minutes, and 1 hour. Day traders chart 15 minutes, 30 minutes, and 1 hour. The next trading style is swing trading. Swing trading means you leave your trade for days. You leave your trade for days. That means you take a trade on Monday, you can leave it to the next day, you can leave it till Wednesday or Thursday, even Friday. Then you are a swing trader, you are trading the swings. Market swing. For those of you that are already in our crypto course, when market move like this, each of this area is a market swing. That's what it means. So you trade the swing. So if you understand this, this will also tell you that this is a market swing. 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 This is also a market swing. So swing traders trade the swing in the market, and their favorite chart is 1 hour chart, 4 hour chart, and sometimes 1 day chart. And then the last one is position traders. They leave their trades for weeks and months. Position traders leave their trades for weeks and months. And the favorite chart is 1 day chart, 1 week chart, and 1 month chart. That's what position trader look at. So it depends on the kind of trader you are, which you will identify by yourself in the course of our course, which is starting next week, immediately after this free trading. So are you a scalper? Are you a day trader? Are you a swing trader? Are you a position trader? Depending on the kind of trader you are, you will still make money from the market regardless. So that is forex trading style. So before we go to Q&A section for tonight, I want to explain something very important. Like I said, we are going to start a course, a forex trading course, and the packages for these courses will be dropped in the group. And for those of us that will be joining us, don't bother much where you will get capital from, because we'll be guiding you to a pro firm account that you will apply for and get the pro firm account and start trading. But the most important thing you need to do is to know how to trade first. You know how to trade, know how to do technical analysis, know how to do fundamental analysis, plus sentimental analysis. The courses will be dropped in the WhatsApp group, and also if you're watching on YouTube and you want to enroll into the course, check the description of the video. You see a contact and reach out to us immediately and get properly trained on how to trade the forex market and make money from it. Not only that, you'll be added to the signal group. The signal group is where I drop signals, daily signals, and these are very powerful and accurate signals. Let's say, for example, now you're just starting, you don't know how to analyze the market, or you're not that confident about your analysis. You can depend on me. You can depend on other professional traders in the academy and take their trades or copy their trades or copy their signals. More reason why you need to join us. A lot of benefits and others, plus ebooks and a lot of other benefits you will get when you join our trading course, which will be pasted on the WhatsApp group immediately after this training. Once you make payment, you will be added to the trading group, which will commence as it will be indicated in the various groups. All right, so back to our slide, but before I allow question and answer, please help subscribe to the channel and don't forget to turn on the bell notification so that you receive more updates from us. So it's time for Q&A. If you have any question, you can then ask very fast. Any question? The
first question I want to ask is
okay
about the calculation of your profits. Do I need to do the calculation myself?
Yes, you have to calculate yourself. That's what you will do. This one is not what you will run away. You calculate for yourself. Before you enter a trade, it's very simple. Okay, what loss size am I using? And from here to this point is how many pip. If you projected that the market is going to come down, and your projection is that the market should come down to this point, then you should know from here where you are entering for a short to this point is how many pips. So your lot size times the number of pips from here to this point times multiply by the pip value, then you get your answer. You know what you should get from the market. The same thing for your loss. You should know how much you will lose before you enter a trade. That's what most forex traders don't do. You don't know how much you're going to lose, you just jump into trading. You should know how much you're going to lose should in case the market go against you. So you calculate the same thing from here, which is my entry, to this point is how many number of pips. That times your lot size times the pip value, which for this case EURUSD is $10. You should know how much you are going to lose before you enter that trade. Know how much you are going to win before you enter that trade. It's a simple calculation that all traders do before entering a position. So you must have to do your calculation before entering a position. Mr. Sunday. Any other question?
Hello, good evening, sir.
Hello, good evening, sir.
Evening,
Yes.
thank you.
Yes. You told us that you are going to give us video on the how we can verify our derivative account. So,
Okay, that video will be ready tomorrow, but latest Monday. But before we share the video, I will do a screenshot tomorrow on how to go about it. A very short screenshot on how to go about it on the WhatsApp group, so that you can do that very quickly.
Okay. Then second question. Some of us we have done beginners and advanced course on cryptocurrency. Like me now, I want to also have more knowledge on forex trading. So my question is, can we use the knowledge of technical analysis we receive from cryptocurrency to trade forex? Or we have to also start afresh, from beginner class on forex. So that's my. Or is there anything you can just do as discount for some of us that are already in the group? That's the second question I want to ask.
Okay, like I said, this is a forex course. It's different from crypto. Everything about crypto is crypto, forex is forex. If you are our student already, that does not mean if you want to enroll for forex, enroll for forex. If you are for crypto, trade crypto. If you want to trade the both, which is what I do, people like David and other instructors in the academy, you don't have any problem. For technical analysis is the same. That's the truth, okay? Technical analysis is the same, but fundamentals are not the same. When you see the course, you will see that the forex course have fundamental. For the advanced, they have fundamentals, and it is fundamental that move the markets. That's what move the markets. Any market is moved by fundamentals. That is the news. So you must know how to read the news, know how to analyze the news, and correlate it with your technical. If you know how to do technical analysis in crypto, you can apply the same knowledge here and it will work. But do you know other fundamentals in forex? If you don't know, you need to know all that and get help from us. The next question, please.
Okay. Sorry, then the last questions. Okay, sir. Is if you want to collect your profit. How can you do that? You want to withdraw money from your account. How can you go about that?
From on forex accounts?
In forex.
It's very simple. Any trade you place, like I placed trade yesterday. Like I placed trade yesterday on my derivative account, which I want to open now. I placed a trade on my derivative account yesterday, and I made profit. That profit automatically reflects on my broker's dashboard. That's my broker's website. Okay, and I can withdraw from there. You don't withdraw on MT4 or MT5 or what do they call it now, TradingView. You don't withdraw here. Every trade, if you lose, it will reflect on your broker's website. It's interconnected. If you gain, it will also reflect. Okay, so you can withdraw from your broker's platform. I believe you best understand that explanation, and more reason why we choose Deriv. Deriv have cryptocurrency option where you can deposit through cryptocurrency and withdraw through cryptocurrency, either to Binance or to any wallet, for example Trust Wallet or MetaMask, and then you sell it and you get the money in your bank account. And also you can use your bank card, your ATM card, and do deposit and also receive to your account with same card. So these are very simple things. There is no need to panic about how will I withdraw my money and a lot of those stuff. Everything will be explained, and I will show you how to do it when you get started fully in the course. Any other question?
Yes. Good evening.
Yes. Good evening.
Joseph, go ahead.
My question is this. Though I joined the class late because of some circumstances, I don't know how to calculate the PIP.
Okay, for the sake of time, I won't go back to know for you to know how to calculate PIP. You simply go and watch the video. Simply go and watch the video. This video will be ready.
Okay, you'll be ready on YouTube, right?
Yes, so just watch the video. So ensure that
able to locate it instantly.
the link will be sent to the group. You will see the link in the group.
All right, thank you.
Okay, on this very channel.
All right.
Next question, please.
Hello, good evening.
Hello, good evening.
Evening.
Hello, good evening.
John, go ahead.
Yeah, good evening. I want to ask, in this training that we're about to start next week, are we going to start with a demo account or a real life account?
Yes, something very important. You don't need to start with the real account. You start with a demo account, which all broker gives demo account. Okay, so you start with a demo account and play with it and see how successful you are. If you want to start with a real account too, you can start. Like I said, for derive, for the cryptocurrency option, you want to deposit through cryptocurrency, which I advise we do because of the dollar rate there. Once you make profit, you can always withdraw through crypto. $50 minimum deposit. $50 minimum deposit. There are brokers that allow up to $25, which derive do with card option, but for cryptocurrency option, $50. So you can use a demonstration account first as you just start trading and not a real account.
Okay.
Does that answer your question?
Oh, yes, sir. Thank you, sir.
All right.
Hello.
Okay, go ahead, Darlington.
Okay.
Darlington, go ahead.
Yeah, my question here is forex trade can an illiterate trade on it? Like someone who has not passed through education before, can he still trade on forex trade?
Yes, that is why we are here. I was once an illiterate and a novice, but I began to learn the forex market back then in 2017. And it did not take me longer. Yes, it did not take me longer. I'm now a successful trader, own the academy with some other instructors like David, which is a very good trader in the academy as well. So why can't you? You can do it. You can do it. So a novice, you don't know anything about computer, don't know anything about forex, don't know anything about trading, just come and allow us to do the work for you.
Okay, no problem. Thank you.
Okay, no problem.
All right.
Thank you.
Thank you too.
Hello.
Any other one?
Hello, good evening.
Yeah, I can hear you. Go ahead.
Okay. Yeah. So my question is, I just want to ask about the 3-month class that you said you'll be having. Is it going to be a virtual class or an in-person class?
No, it's going to be a group training, and it's going to be a virtual class on Zoom, like this Zoom class here. And all classes are recorded. We record all sections so that if you're not around or you miss any day because of your tight schedule, you can always get access to the training and watch the video over and over again. So it will be on Zoom and you will have access to the videos after the training, so that you can rewatch it over and over again. And it's a group training, please. It's not a one-on-one course. It's a group training.
Okay, thank you. So, sorry, is the price going to be sent to the group chat for people that are interested?
Yes, the price will be sent to the group chat immediately after this course, this training right here on Zoom. Immediately I end the training, the prices will be sent there. Choose the package, make payment to the company's account, Remit Trade Limited, and then you send us screenshots.
Thank you very much, sir.
All right. Yeah, I'm with you.
I want and the question is based on the leverage. Let's assume you have a $100 account
account,
Okay.
and you want to trade using the micro or mini lot without any leverage, is it possible?
No, you can't trade in the forex market without a leverage. You must choose a leverage no matter how small it is. Once you open your account, the leverage is already choose. Okay, it's not that when you're placing a position you now choose the leverage. No, in forex you don't choose the leverage while placing a position, unlike crypto. In forex, when you're opening the account, that's when you choose the leverage, which automatically affects your account when you are trading. That is, the leverage is implemented on your account when you are trading, so you don't have to choose your leverage when you are placing your buy and sell position, unlike crypto that you have to choose leverage when you are placing each position. What you choose in forex when placing buy or sell position is lot size. Once you place your lot size, you are good to go, because lot size and leverage interconnect, just like I explained in this very slide right here.
Okay, sir. I understand what you said, but I want to still ask. What if maybe you have $100 account and you choose a leverage of 1:20, but you want to place a trade with mini lot? Is it possible?
Yes, when you choose a leverage of 1 to 20, okay, and you have $100 as your account, the money in your account, what that means is that you can occupy a position worth this amount, 100 times 20, which is a what? This is 2,000. 2,000 will give you 0.02 micro lot. So you can take a position of 0.02 micro lot. So either you take a position of 0.01, which is the least micro lot in the market, or you take the maximum 0.02 micro lot.
Okay.
Do you understand? Yeah. Because your leverage is 1:20 and you have $100 in your account.
Okay, sir.
It's a very simple calculation. And one thing about all these things is that if you want to know how it works, begin to do it. Once you start doing it, then you will know the implication, even on a demo account. You don't necessarily need to open a live account and start doing it to practically examine this stuff I'm talking about. Once you open a demo account and start placing trades, in fact, in the course, it will be very, very practical. Very, very practical and demonstrative. And you have access to us for anything as far as Forex is concerned. The next question.
Okay, sir, but how much is the cost going to cost?
It's going to cost different prices for just two packages. You have to choose the one that suits your financial status, and I said it should be posted in the WhatsApp group immediately I end this training.
Okay, sir. Thank you, sir.
All right, thank you. Next question, please.
Yes, I have a question, sir.
All right.
Sorry, this is my second time of asking. These your leverage, these lot sizes, you choose them from the broker platform, right?
Leverage you choose from the broker's platform.
Yes.
But lot size you choose it anytime you want to enter a position. If you were here yesterday when I took a position here on MT4. Okay.
Yes.
I don't know whether you can see my screen on this MT4. Yes. And this is where you choose your lot size. This is volume. You just choose your lot size, choose the market execution. This is your currency pair. This will be active. You just place.
Okay.
And that's all.
Okay. Then I used to hear of a free margin. Is it applicable to Forex?
You want to hear what? Sorry.
I used to hear of free margin. Free margin. Is it in
Free, yes, it's applicable to forex. All those terminologies will be, yes. You will have free margin in forex. Yes.
Thank you, sir.
All right. Next question, please. Another question?
Hello.
Okay, like I said. Okay, Solomon, you want to ask a question?
Hello?
Yeah.
Can you hear me?
I can hear you, Solomon.
Okay, please, what I want to ask is just like you know, this forest of a thing is totally different, new terms and everything, or like crypto. So what I want to ask is this leverage we are talking about is not like the leverage on crypto. So what do you consider like 1 to 20, 1 to 100, 1 to 1,000? What do you consider as a high leverage when it comes to forex? Like crypto, you know, in the academic we are advised to take at least not more than 1 to 10 leverage. But yes, I'm hearing of 20, 100, 1,000 leverage. So I don't really know how. What is the highest leverage or the minimum leverage you are advised to take when it comes to forex?
Like I said, everything depends on lot size. Everything connects to lot size. Even though you choose a very high leverage, when you're opening your account to your broker, you can still went and choose a very low lot size. The lot size determines how much you will make or how much you will lose when it comes to forex, unlike crypto that uses leverage. Okay, so don't bother much about that. Now, the best leverage to use for a trader is 1 to 100. In fact, 1 to 100 sometimes is very, very high. But even though you use 1 to 100, you can still come and use 0.01 lot, which is the lowest lot. It doesn't mean that you must use this lot size, because everything depends on what? Lot size. This is the most important thing. Lot size is the most important thing. When I show you this thing, you will not see leverage here. If I go to open order, new order, there is no leverage here. What you will see is what? Lot size. Your lot size is the most important thing. So focus on lot size. Smaller lot size is okay for a beginner, not a big lot size. That is what we should be talking about, and not leverage, unlike crypto, because this is a different platform, a different market altogether.
Okay.
Yeah.
Okay.
And most of these things will further simplify in the course, like a further breakdown. So don't worry much if you are joining us. Next question before I end the training.
Hello. I wanted to ask this question yesterday before the network was the network was fluctuating before you closed the class yesterday. Just like you know, in crypto, sometimes majorly we have we see that Bitcoin move the market, move most times, move other currency, other crypto coin along. So let me say control the market. We have control the market. Do we have something a particular pair that control the market when it comes to forex also?
No, no particular pair controls the market, but what you're trying to talk about is correlation. When currency pairs correlate, move in the same direction. In forex, we have a lot of pairs that correlate, which I'm going to give you a formula, correlation formula. I'm going to give you in the course. Okay.